I'm Dave Couk, Mortgage Loan Originator at Integrity Home Mortgage.
Hey, and I'm Tyler at Ross Real Estate in Warrenton, Virginia. This is happy to be here with Dave again.
Yeah, so it's been a while since we've done this. A lot has happened in the last 9 months, obviously, in both the mortgage and real estate market. And Tyler and I wanted to reconvene and kind of just give folks a sense of where we've come in the last 9 months, where we are, and the direction that things seem to be headed. One of the things we don't like doing is trying to pretend for even a minute that we have a crystal ball and know what's going to happen in the next 3 months, 9 months, 12 months. So we're not going to do that, but like a compass, certainly a compass points in a direction that you are going, and we can at least get a sense of where it looks like things are headed. So I think without further ado, I want to have Tyler kind of kick it off with a synopsis of where things seem to be at the beginning of the year and where have we gotten to at this point, and what are you seeing out there on the real estate side of the street?
Yeah, sure. Well, first of all, I'm going to say it's always a pleasure to be here with you, and I learn as much from these conversations as we hope that you do. Dave's been one of my favorite lenders for a long time, and in addition to that, a friend, but has a background in finance in his former career. So I always take everything that he says very seriously. But you'll remember I used to do these market updates, and I'll give you one now. Presently, with the FAQs County, we have 167 homes in inventory. 21 of those homes are under $500,000. I'll say one of two of those are fixer-uppers. 95 are 500 to $1 million, and the balance of 51 is $1 million plus. And then of those 167 homes coming soon or for sale, 26 of those homes are paper houses, homes that are to be built, that have not yet been built. So to compare these numbers directly, the inventory is actually slightly higher than it has been in the past. When I was doing these months ago, we were in the 140s, 150s. So it's almost negligible, but we're seeing more stabilization in pricing. We're seeing a little bit of downward pressure on pricing. Buyers have had a little bit more flexibility in the things that they're asking for, but the lack of inventory is keeping prices pretty high, and it's a lot of ways more the same from my end. I've read and I've seen that other people have slowed down dramatically. Our office is actually up 20%, so I feel like we're a little bit of an anomaly in this market because everybody's been doing great. So, but I can sense things changing presently. Like realtors, if the phone's ringing, it's a great market. If the phone's not ringing, it's not a great market. And the phone's been ringing for us for months. So you talk to more realtors, more buyers, you've certainly got your thumb on the pulse, because I'm in a little bit of a smaller world. I'm really interested in your take on that.
So I have these conversations with a lot of different agents on a weekly basis, and where I think we've gravitated to is, first of all, the inventory situation is something that I want to expand on a good bit in this talk. But the agents that are established and have good market share, good reputation, have done the grinding, have done the hard work and established that reputation, they seem to be the ones that are still capturing enough business to get by. It's a challenge. Every deal is difficult, but there's no substitute for having laid the groundwork when things were good and built a reputation that people look at as, I can trust this person, they're experienced and they've been getting it done in years past, so I can trust them now in a more challenging market. Those are the agents that seem to be, capturing the bulk of what's happening in the market right now.
Yeah, most definitely. You earn your stripes, and you get your disproportionate share when things are bad, particularly because it gives you an opportunity to really expose the value add that you bring to the transaction. Whereas 2019, 2020, 2021, it felt easier to get the volume of business because there was so much, and now there's certainly just less volume turning over, and certainly all the refinances have evaporated, gone to nothing.
Yeah.
But we've talked many times how your business, that's just
We
that's servicing
in
your
Integrity
clients.
Home Mortgage, we've always tried to treat refinance as ancillary business.
Yeah.
It's always been our president's business model to support buyers and buyers agents and help them help their client in the best way possible. And we were always almost on a weekly basis warned not to chase the refi business because it would go away. But it sure was nice when it lasted. You know,
Yes.
it was kind of crazy.
Yeah, and having met and spent time with your owner, I know he empowers you guys not just to support the agents, but I know how much he supports you guys and has your back as loan officers to give you the resources you need.
And he, you know, when things were good, he rightly knew that we were going to hit a tough market. Company had no debt, put us in a really good position to be able to make it through this market, not have to lay off a bunch of people. Some of the mortgage companies really pulled in a whole lot of extra employees to try and capture all of that refi business, and then it went away, and then immediately, you know, they were laying off people in droves, and we were very cautious about that, and in fact offering to most of our ops staff the opportunity to make time and a half or double time, you know, to just work 7 days a week while the volume was there, so that, you know, we weren't going to have to lay people off when times changed. So.
Well, I mean, we're here giving a market update. What are, I know the baked question is, what are rates today? Because there's so many.
Yeah,
areas.
so the mortgage market is getting hit today. When I came over here, right before I came over here, the 10-year Treasury yield was at 4.77. The highest it's been in quite some time. Certainly the highest it's been this year. So looking at this average 30-year mortgage rate sheet going back to 71, you see here that the 52-year average is 7.74. I would say after today, unless there's a big turnaround in the 10-year Treasury, you're probably we're going to be hitting that 52-year average here any day. And for some people, depending on credit score, loan program, etc., they're already looking at, you know, 8+. So
yeah, we're seeing pre-qual letters with 8 on it.
Yep. So we've come there. So one of the things I really want to emphasize, at the beginning of the year, we started off with rates in the low to mid 6s. The 10-year Treasury yield started the year, where did we start the year? Right at like 3.79, and we are a full percent above that now.
Yeah.
That said, we had tight inventory. You know, it's funny, when I switched over from being a financial advisor to being a mortgage lender in 2010, every agent I talked to was complaining about inventory in 2010.
Is that right?
And it has only gotten worse.
Yeah.
How bad is it, and why do I think that is the main thing that we're having to deal with? I started looking back at some of the previous decades, and in Virginia particularly the last few years, in terms of housing units being built. And from 90 to 99, nationwide, we built about 12.5 million housing units. 2000 to 2009, 14.5 million housing units. And interestingly, that included the complete collapse of the mortgage and real estate in 08, 09, and we still track 14.5 mil housing units. But from 2010 to 2019, we only built 6.9 million housing units. Half. In Virginia, because I was curious, in the 90s, we were tracking about 50,000 housing units a year. And then early 2000s, we were tracking about 60,000 housing units. We're barely tracking 40 now. Yeah. And yet we've had population growth. So what I want to point out and emphasize with 3 lines underneath of it is anyone that took an Economics 101 course should understand the concept of supply and demand. we are at a point now where inventory is so sparse that at the beginning of the year, we were seeing an average of 5 offers on every listing. And in spite of the fact that rates are now in the mid-7s, we're still seeing 3 offers on every listing on a national basis. And that's with rates continuing to move up. We're still seeing multiple offer situation. So as our friend Becky Miller likes to say, it doesn't look like we're going to be able to build our way out of this inventory shortage in anytime soon. So one of the things that caught my eye the other week was I saw that building starts had declined in August. But simultaneously, I saw that applications for building permits went up. So correct me if I'm wrong, because I think this falls over into your side of the street, but it occurred to me that maybe the reason that has happened and is happening is because builders see this lack of inventory. They want to build. They are anticipating that rates will come down, because we've been talking about mortgage rates, but we haven't been talking about construction loan rates, which are even higher.
Oh yeah.
So builders apply and get their piece of land, but they see supplies, costs are still high, cost of building is high, and certainly the cost of borrowing is high. So my guess is these applications have increased with the hope that we are closer to the end of this interest rate tightening cycle, and that sometime next year, earlier part of the year, maybe spring, we get a little bit of relief and rates stop going up, and they get back to building. At least that's my hope, because that's the supply side of the equation, and the supply and demand is way out of sync right now.
Intuitively, that all makes sense to me. From an anecdotal perspective, from Fauquier County, I've participated in speculative building 12, 15 homes over the last few years, and I enjoy doing it and I like it. The reason me and my partners aren't doing it is because of the unknowns. One signature on one document at the Fed level or the government level could completely change a 3, 6, 9 month process. And then additionally in Fauquier County, there's not a lot of lots. There's not a lot of places to actually build homes. And so you see the smaller local builders who would spec build 2, 3, 5 houses at a time are having difficulty finding lots, and they're having difficulty getting their head wrapped around higher interest rates to go out there and spec build with a timeline that really anything could kind of happen in. So there's a lot of unknowns, and I wonder if the applications for building include remodels, because I know HELOCs are at like an all-time high.
Oh, HELOCs are high too.
So people may be either leveraging those to make bills or pay for things that they can no longer pay for, or to do renovations rather than move. Like, I'm a great example of that. I'm better lucky than smart sometimes, but I bought my house with great timing. I'm a candidate to move every 3, 4, 5 years, and I'm definitely not moving because to replace my house with my mortgage is impossible. But you also see a lot of the new construction. I didn't count this, but of the 26 paper houses in Fauquier County, I believe the majority of them are NV or Van Meter, which are sizable, big companies. You get 1 or 2 or 3 kind of local builders, but the big builders are gobbling up a lot of the lots and still just cranking through their inventory. So I wouldn't be surprised if the majority of those home starts are from the bigger builders, because the smaller guys of the dozen that I communicate with have all pulled back pretty hard on their spec building, certainly relative to 2021, 22, where if you had a lot, they were going to buy it.
Yeah. Well, one of the things that I think needs to be pointed out, and you know this as well as anyone, people move for different reasons.
There's always a reason.
People don't move simply because mortgage rates are at any particular spot. People move because they need to upsize. Their family has outgrown their house. They need to move. More urgently, I guess, people move when they get transferred with a job. You and I just closed a loan last month for some folks that were getting transferred from the Midwest. They don't care what the rate is. They got to move. They're moving.
The remote work environment allowed people to go anywhere they wanted to.
People that are in a really untenable rent situation. I've had clients before that were living in a basement that flooded every time it rained, that had kids that were suffering from mold problems because they were living in a crappy rental situation where the landlord just wouldn't take care of the property.
Yeah.
Those people don't care what the rate is. They only care, do I qualify and can I buy a house, because this is not tenable. So there are a lot of reasons why people move outside of rate. One of the things that I'm seeing more frequently now, and I think it's a trend that's going to continue, I'm seeing more people, I'm a little bit older than you, but I'm seeing people in my peer group looking for houses that will accommodate an aging parent. I'm seeing folks that are interested in, depending on the condition of their parent, an accessory dwelling unit on the property, or a basement with a separate entrance, or one thing that there seems to be a real shortage of is one level homes, where an aging parent doesn't have to accommodate stairs, and I don't see that trend going away. So in those situations, I have a borrower right now that just needed to get their mother under their wing, and it's all about that, not the rate. So I'm telling my clients, marry the house, date the rate. There'll be an opportunity to refinance at some point.
I tell everybody that over the long term, owning real estate is the way to build wealth, and that if you can afford it and you don't have to sell it, you're not compelled to have to sell it on a date certain, then buy something. I mean, sure, in 5 years it may be worth less, in 10 years it may be worth more, but as long as you're not compelled to sell it in 5 years or whatever that date is, and it doesn't matter how much your house is worth until you decide to sell it, and you don't want someone else deciding that for you. So interest rate. My dad tells me stories about how much of a genius he felt like back in the early 80s when he refinanced to the low rate of 14.5%. And Uncle Joe Allen used to tell me he had an ad in the paper that said, our exclusive, what's the word he used, Joe, if you commented if you remember it, but he used a great word, like their exclusive access to like 14% loans because of what an amazing company they were. It's like, people were buying houses then.
Yeah, when you look at the group of homeowners, collectively, the average homeowner versus the average renter has a net worth of 40 times greater.
40 times?
40 times greater than the average renter. So for that reason alone, I just think, don't worry about where rates are if you qualify. And that's the other thing I want to point out. Recently, because rates are higher, certainly there's been some indigestion over where rates are. So I've had a few borrowers that were, not super pleased about the rate, but, and in our case, we had a mutual client that this was very true. I pointed out to them that they wouldn't have won the deal if rates were 1% or 1.5% lower. They won the deal because there was only one other person competing against them. Yeah. They made a strong offer, and even though it was a contingent offer on the sale of their house, they won the deal. They wouldn't have won that deal if rates were much lower. Instead of competing against one person, they'd have been competing against 8 people. Yeah. So be careful what you wish for. If you qualify now and you need to buy for any of the reasons that we've mentioned, you should absolutely do that, knowing that you're going to see increased competition. If you wait until rates come down, all of these folks that got pushed off the game board are suddenly going to come back onto the game board.
This is true.
But I think everyone is of the general agreement that once the Fed hits their inflation target in the 2% range, the banks are very eager to get rates back down so that they can pick their loan volume up again.
And that speaks volumes, just the fact that the Fed is desperately trying to get to that inflation number. That means hard assets are inflating in their value. So owning a home, if it goes up 2% just by nature of inflation, does that make sense to you?
Well, think about this in terms of rates. So I kind of thought about this this morning. Think of inflation as economic cancer.
Okay.
And the cure is raising rates. Mm-hmm. So that's the chemotherapy.
People lose their jobs,
it's painful,
lose their cars.
It's painful, it's uncomfortable, and it's sometimes it just seems like, how in the world am I going to get through this?
Yeah.
But the reality is that the disease is worse than the cure. Mm-hmm. Higher inflation robs your purchasing power, and we all know that pay raises and inflation, wage growth isn't on par with the 9% inflation rate that we hit last July,
which I think is understated personally.
Yeah, so it's kind of crazy, but that's just the world that we're living in right now. And I think the Fed is hell bent on getting that inflation target down to 2%. We don't know when that's going to happen, but we have certainly been moving in that direction. I think it may take a little bit longer. I think we may see higher rates higher than expected because, face it, people are hopeful and optimistic, no more so than the current administration and the Fed, wanting us to be confident and comfortable that they're doing the right thing. Mm-hmm. And they are. Raising rates is definitely the cure, but we're not there yet. So again, my message is, if you qualify, you don't have as much competition right now, buy and refinance later.
And all over time, they're not making any more of it. Real estate has always gone up over time, so I always emphasize the timing. And you can't, and you'd speak to this in your From the Trenches emails about even thinking about timing the market, because I'm a sucker for trying to time the market. I try to time the stock market. I try
That's
to time
because
the real
you're
estate
young.
market.
You haven't learned yet.
Market.
You're still young.
Yeah. I try to time every market. I try to time the grocery market.
You got to get beat a few times, beat over the head, and then you
taking a whipping or two. So I'm learning my lesson. So as the sage, wisdom, financial advisor, and loan officer of your history, can you speak to timing the market a little bit?
It's a fool's errand. There's an anecdote out there, I think, where one of the former Fed chairs was looking to refinance a mortgage, and refinanced only to have rates continue to go down and down and down and down and down. So the saying was, well, gosh, if someone at the Fed who controls rates can't figure out if you're even close to the bottom of an interest rate cycle, who the hell can?
There you go. Say no more.
Yeah. So I just think that's just a fool's errand. Mm-hmm. The bottom line is we know that homeowners as a group have a higher net worth. We know that throwing rent money out the window every month doesn't build equity in any way, shape, or form. Mm-hmm. And there's nothing more comforting than owning the roof over your head that everybody wants.
You get to control your own destiny in a way with that.
What do you? Last question for you. What, if anything, are you doing differently now? Since you're mostly on the listing side, and you do a great job on the listing side, by the way. How are you coaching your clients now, and is that any different than how you were coaching them at the beginning of the year?
That's a really interesting question. I find that my job in a lot of ways is to manage expectations. And so, like you said, we can't, our crystal ball is only so clear. We have a compass and we do our best to express the direction that we think that the compass is pointing and will ultimately lead. And of course, we've got all the agents in the office to draw experiences from and pull together our collective, past 6 or 12 months of working through the changing market. So I'm not sure that our approach has necessarily changed when it comes to selling a house. We still want to stand out. We still want our initial presentation to be perfect, and anything less than perfect is a botched presentation. And just kind of preparing people that you're going to be on the market a little bit longer than your neighbor that sold it 18 months ago. You're not going to have 18 offers like your neighbor who
Oh
sold
no,
it
20 days instead of 8?
It's crazy to think that your house would be on the market 2 or 3 weeks. But is it fair to call it a transitional market right now? Like, it's not on the market Friday, under contract on Monday after reviewing a dozen offers. And so rather than servicing 15 offers and 15 real estate agents and 15 buyers constantly looking for updates and information, we're servicing our client more, bringing the value to preparing their house, making sure that all the vendors are doing their jobs. And here at our office, we've built a back office that's incredibly supportive, that allows us to do our job. So much of our job is lead generation and paying Zillow and paying Realtor.com and generate leads. 50% of your time is spent generating leads. Our time is more allocated towards servicing the customer, and everybody in the office is really great at that. So our transition is working less with the 15 agents, managing those people, and more helping manage the expectation of our clients, our buyers and sellers.
Well, there you have it.
Have you changed the way that you are setting expectations for your buyers?
Well, so there's the same thing, managing expectations. Probably the biggest thing that I have to deal with is, of course, rates being higher, and it's happened so fast that in the blink of an eye, someone who I pre-qualified in April can't believe, unless they were watching it on a regular basis, can't believe how much higher their rate is now. So when they finally do find the house that, they want to make an offer on your listing because there's finally something that they like, there's that immediate reaction of, what? You mean rates, unless you've watched it on a regular basis,
Yeah.
It can be a little bit surprising because this has happened really fast. I've got a contract that just got ratified last week, and this gentleman started exactly a year ago.
Yeah.
So going through the file and looking at all the rates that I quoted him when he was making offers on different houses, it's been a real shock to him where things have come. And I just have to emphasize, you don't have much competition right now. Mm-hmm. So that's why you just won this contract. You had a lot more competition a year ago when rates were lower. And now you don't. You won the deal. Don't worry about it. We'll refinance when the time comes. So.
And I know you'll re-emphasize this, so I feel comfortable speaking on our behalf, but I'll let you piggyback onto it. If you are considering getting into the market to buy or sell a house, get in front of it. Start preparing 6 months ahead of time. Eat it like an elephant, one bite at a time. If you're thinking about buying a house, you get with Dave, get with your loan officer. Get all your documents in now. If you want to buy in the spring, you want to buy next fall, do it all now, lay the groundwork. And same if you want to sell in the spring, call 3 different realtors today and tell them you want to list in the spring, and you've got time to make your decision, because it's an emotional experience, it's a physical experience, and there's a lot of things to do. And you'd like to make it as enjoyable and relaxing an experience as possible.
Yeah, the last thing I would say, piggybacking on that, is that I've always felt that a good loan officer and a good real estate agent should be able to take a process that can be confusing, intimidating, and at times overwhelming, and make it simple, understandable, and hopefully stress-free. There's always going to be some level of stress in there, but a good loan officer and a good agent should most definitely be able to do that, but you got to give them a chance to do that for you by getting involved in the process as early as possible, to iron out any wrinkles that might be unforeseen, and there's always something out there.
And Dave's been a loan officer for a long time now. I've been a realtor for, I think it's 18 years now, and I've been on the board for, it's going fast. I've been on the board. I've been on the other side of lots of agents. We have a lot of really good real estate agents in this area, good loan officers in this area. You've worked with agents that we talk on the phone and you're like, this person did an amazing job, and I just love to know that we have terrific resources in our community that have been here for a long time, that know what they're doing and genuinely care about the person. It's not about the transaction as much as it's about, I've never heard someone say, my deal's falling apart. It's always, I really want to do this for my buyer or my seller, and if they take ownership of it, and we got a great place.
Well, hopefully that gives you some food for thought. I'm always available to answer any questions or help walk through the process. And let's not wait so long to do this again.
Always enjoy seeing you, man.